So we have all the policy values. Premium amounts go here, and the cash values right into this column. That part's pretty straightforward. And then this part here shows the policy loans based on the policy loan interest rate, the cash values that we put in from the illustration, and the type of loan repayments that we're making. So
Hmm.
these numbers will change whenever we change any of those other numbers. And another way, this field right up here where it says policy loans max,
Hmm.
this you can change this to a manual schedule. And the reason you would do that, for instance, would be, let's say you wanted to come in here in year 2. Maybe there was a big purchase coming up in year 3, and maybe you don't want to take a policy loan in year 2. Okay, well, you
Oh,
just zero that out, and then the policy loan then is increased what's available, the amount that's available here in year 3 then. Okay,
right.
or if you have a purchase for a certain amount, you can just put that amount in. And the nice thing is it won't let you go over what's available in that year. So if we tried to put in $35,000 here in year 2, it's going to immediately cut that back down to 28, which is the max that's available. Okay,
Okay.
so you can't ever over illustrate it, which is nice. Okay.
Yeah. Awesome.
The other thing that we have then is we go to the loan repayments. And for the example here that comes with the Cash Flow Illustrator, I did all different rates and all different repayments, but when you're working with a client, I would recommend you use all the same. So
Okay.
let's use 10% over 24 months here. Okay. So now they're all 10% 24 months, and you notice that the policy loan values change to meet those. And I'm going to change this back to maximum just to make
Okay.
sure we have everything in place there. Okay.
Perfect.
And then over here, then these columns, you can't actually edit the payment previews, but you can see how much the payments are on a monthly basis and on an annual basis. So that way you can make sure it's staying within the budget that the client has, or whatever we're going for
Um.
there. Okay.
Okay. Yeah.
So once you have it all entered there, if you wanted to save the scenario, you could click on Save Scenario. And this is the sample one that we have open right now. I'm going to save this as example. So I have a lot of those, and then that just saves to that file. So I could have browsed to the client's file and put it in there. When I go to Open Scenario, then I can see them both right here.
Oh, excellent.
They just save as regular Excel files. Let's see, anything else on here? You can use this clear button to clear everything out
Okay.
and start fresh. The paste values button right over here is, you'll probably use this. Let's say, for example, that you copied the numbers off an illustration,
Mhm.
and when you paste them in directly from a PDF file, it's okay. All the numbers will come right in. But if you had pasted the numbers off an illustration into another Excel file first to do maybe some other calculations or comparisons with other policies, and then you copy them from that Excel file and come to put them into this Excel file, if
Uh-huh.
you do a regular paste operation, it will lock these cells and you won't be able to get back into them. Kind of like these payment ones. You can't.
Oh, okay.
So it would lock these cells. So to keep that from happening, when you copy from Excel to Excel, which is, then you would use paste values button. You would click right up here and then you would hit paste values, and that keeps those cells from locking up on you. Okay.
Perfect.
And once you have all this data input, then the next step is just to select which presentation that you want over here. And you can either go with the basic, which just shows the policy and taking the loans directly from the policy and putting the payments directly back in. Or you can go with the
Oh.
SA flow, which shows the separate checking account and the personal or business checking account in there as well. And that's generally the one I use because it just solidifies what we're the whole
Teaching.
process we're talking about, right? And another reason that we switched to this flow is, for corporations it's necessary. Okay, but for personal, you can just use your personal checking account, but it's easier to track if you use the separate checking account. And
Mhm.
it's also easier then to switch to your corporate loans later. So we have all of our clients use the separate checking account because it doesn't cost them any more, and it helps with the tracking even on the personal loans, and they're ready to go to corporate loans then when they get to that point.
Awesome.
So then these two right here are black and white versions. of each of the basic and SA flow, and also they do not have any of the numbers stacked on top of each other. When we go to this presentation, you'll see how some of the numbers are stacked up on top of each other, but they
Yeah.
don't all appear at the same time.
Right.
So having the printout version, it unstacks those and puts them in a format where you can print it out and give it to someone.
Neat.
Okay.
Okay.
So the SA flow here, we'll click OK. We just select which one you want here and then click OK. And then right now it's loading the PowerPoint on my other screen right now. And it will switch back here as soon as it's ready. Just a second. There we go. So here it is. So on here then, it takes all the numbers that we put into Excel and it updates them here in the PowerPoint for you. And if you're using this on a laptop or just a one-screen computer, you shouldn't have any problem with it going to the different screens like I just did. But that's the way it works. All right, so we have this shows the premium coming in. So we have the $25,000 coming in, and it shows then what's available for the loan right here. And I'm just clicking on my arrow keys to advance this. You can also use the controls right down here in the corner if you want to. And something else that we'll often use is, see right here, there's a pen tool. So we use this a lot when we're on GoToMeetings. We'll just take the pen tool and then we use our Wacom tablets and we can write all over the screen. And I'll probably do that a little bit here as we go. Okay.
Oh, okay.
But this shows the 13,000 going from the policy to the separate checking account, and then from the separate checking account to the personal and business account, and then we make our purchase from there, and then we set up the repayment plan. Okay, so now we go to the next step. It shows the amount, shows the number of months, the interest rate, and shows what our monthly payment is on this.
Okay.
And if you wanted to get really if you wanted to demonstrate this a little bit more and how we come up with that monthly payment, you could pull up the financial calculators here. Let me go ahead and pull those up. Let me get the payment calculator. And I say it's going behind this screen, so I'm not going to do that right now.
Okay.
Okay, but you can show them how that payment calculation works and how increasing the term, like you could say, well, what if we did 36 months? Well, your payment goes down, and you could even do a volume of interest calculation if you wanted to.
Okay.
But anyway, you can demonstrate that a little bit more. And what's really nice about this is it gives you a framework from where you can go just about anywhere. It gives you the foundation of the numbers here, and then you can jump from here and demonstrate any aspect of it in more detail that you want to.
Oh, perfect. Okay.
Okay, so here's the monthly payment, and we show that coming in 12 times over the course of the year, and so it's a total of 7,588. And then we show how that's working with the separate checking account. It goes from the personal and business account into the separate checking account and then back to the policy here. And at this point, then I'll usually draw on the screen and say, well, what if we have, let's say, 3 months of this 632? You can have that build up here in the separate checking account. What if you need that money again over here in the personal or business account? Well, you don't need to send it all the way back over to the policy each and every month. You can just store it up here in the separate checking account till you have, like, say, it's going to be about $2,000 here in about 3 months, and then you can make another loan out here. And you still have the repayments coming in on this loan then, and you're getting repayments coming in then on another loan. And so you're using the same money over again within 3 months, and you're increasing the velocity of money. Okay.
Oh, awesome. Yes.
And so that's a good way to explain that to the client. And then also to show that, the insurance company isn't, like a bank. So they don't expect to receive payments every single month. So you can build up, 3 months or so of payments in here, and then just write one check over to the insurance company every 3 months if you don't have a better use for the money outside the policy. Okay.
Awesome. I'm glad you addressed that.
Okay, great. And this is a great place to go over that with clients then, as you're talking with them as well. Okay. So then by the end of the year, if we just pay the policy back, we have about $7,500 back over here in the policy. And so we take a summary of the first year. Here you can see that we have $25,000 the first year premium. We have a loan amount. We took a loan of about $13,000, and we made loan repayments of $7,600. Okay.
Okay.
So then we go to year two, and we already have the $7,500 in here from the repayments last year. So we pay another premium, and that increases our cash value by 13,000. So we add those two together. Now we have 21 available to borrow out.
Mm-hmm.
So we take a loan here that goes to the separate checking account, and then from here over to the personal and business account, and we make whatever purchases that we need to make this year. And then we do the repayments just like we did last year. So here's the 21,000, 24 months at 10% interest, and we have the monthly payment of 986. We go through, times 12 for the year. Plus, we also have then the first year loan repayments,
Mm-hmm.
another 7,600 that gets added onto here. And then this month, our monthly payment is a total of 1619 that's coming back here every month. Okay.
Okay.
And then we just show that total up in the policy here at the end of the year. And then the summary of that, the 25,021 was the loan amount, and loan repayments were 19. And something that you can point out too as you go with clients is that each year during the early years, and it's generally the case for about 4 years, depending on your loan repayment terms,
Mm-hmm.
you'll notice that the loan amount that you're able to get out of the policy each year is greater than what you had to make in loan repayments.
Yes.
And that's helpful during the first few years as the client is capitalizing the policy with a higher premium. Then once the paid up additions rider drops off, then the loan repayments are higher, and that it kind of balances out. If that makes sense.
Yeah, it does.
Okay. So that can help with cash flow on a month to month basis, and that's a great place where you could springboard then to the history of Amazon.com that we talk about,
Oh,
and how
uh-huh.
they use the cash flow. They borrowed money, and they used the cash flow just like that during the early years of their startup. Okay, only they were using other people's money. We're using our own money here.
Yeah.
Okay. So then here's year three, and we have 25,000 coming in premium again. It increases cash value by 21, and then here's the cash value that's back in from loan repayments the last year. So we add that together, and that's 41,000 then that's available to use. So that goes over to the separate checking account, over to personal and business, and we don't have to take all of this if we don't have a use for all of it over here. But if we have a use for this 41,000 in our personal or business, where it's going to be of more benefit than just sitting in the policy, well, then we'll take it out and use it. So,
Okay.
so I'm kind of presenting this to you like I would to a client, right?
Yeah, that's what I want.
Good. Okay, so we're gonna make a purchase then, and then this time we just combine all the repayments on a yearly basis, because depending on how many years you amortize that first year loan for, it may or may not be still going at this point. We use 2 years, so it's finished. But if we'd used 3, then we would have had to split that out. So this way
Mm,
it combines all the repayments for the year. You can break it down to a monthly basis if you want. And it
okay.
goes to a separate checking account, goes back to the policy, and here's our summary for the third year. So we have 25,000 premium, 41,000 loan amount, and 34,000 in repayments. And
Okay.
then we get to the 25th month summary, and this is as far as we generally go with
Oh,
clients. Okay, it's
okay.
just to the 25th month summary, because by this point they get an idea of what's happening, and going beyond this, we find that they start to get bogged down in the numbers, or
Yeah.
it's a little bit harder, and they already have the flow down, so it's just the same thing. So the reason year 4 and 5 are in there is because sometimes when you're working with someone like with a rated case, it takes longer for what I'm going to show you here on this 25th month summary to happen. So
Okay. Okay.
so here's year one, the premium 25,000, year two, and year three. So we put a total of 75,000 premiums in so far. Okay, loan amounts so far have been 76,000, and this is what I wanted to show you on this page. Our total loans now have been over what we paid in premiums so far.
Mm-hmm. Yeah.
Okay, sometimes on a rated case it takes a little bit longer than 3 years for that to happen, or if you're using different loan repayment terms.
Okay.
Okay, the illustrated cash value, if we just paid the premiums, is only $53,000 at this point. So we've been able to have the use of another $23,000
Wow.
because we've used that money more than once. It's come back to
Exactly.
us over. Okay, and we've made 27,000 in loan repayments to make that happen. Every once in a while, you'll get a client ask you that asks you, well, if you add up the illustrated cash value here and the loan repayments, that comes to like 70, $80,000. That's you haven't been able to access 80,000 in loans yet. That's because we're still capitalizing the policy. Okay,
Okay.
and so the difference there is the interest that we've paid to the insurance company, but that's interest that we would have had to pay anyway
Mhm.
if we had borrowed that money elsewhere,
Right.
or if we'd paid cash, we would end up losing that money over the next, how many ever years, 20, 30 years.
Exactly.
Has a lost opportunity on that. Okay, and then this last number here, the amount available for loan is zero in this case. But if you had put in a manual policy loan schedule and not taken the full loan this year, then the rest of the loan available would appear right over here.
Okay.
Okay, so that's generally as far as we go then with a client.
Okay. Perfect.
If you go further for certain cases, it's exactly the same flow. The numbers just get bigger each time, because you're getting more and
Gotcha.
more velocity in there. In fact, just for fun, we'll go out to year 5 here. Oh, notice here in year 5, the premium drops.
Yes.
Okay. But
That's when the writer drops.
cash values went up by more than what we paid in premium that year. So they went up by 11.
Oh yeah.
Okay. We get all the repayments through. We have the summary here. And notice by the 5th year here, we had a loan amount 66,000. We paid back 69. Okay. And we could
Mhm.
change that with the different loan terms if we wanted to. But we also have to take into account everything that we've been buying with the loans that we took out. So we've paid 110,000 premium. We've been able to have the use of $200,000 that we've used to purchase, maybe business equipment, goods and services, all sorts of things. Okay,
Okay.
and we have the value that came from that. Illustrated cash value of the policy is 95,000 at this point. Okay, the total loan repayments have been 117 and zero available for loan. So the numbers
Okay.
get really big really quick, and sometimes if people don't have the vision for it, these numbers out by year 5 can scare them. Okay, so
Yay.
that's another reason we don't go out past year
That
3.
far.
They get the flow past there. This potential is there if they have the capacity to use it, to be able to use this $200,000 to make more and to serve more people. Not everybody
Okay.
has the vision to be able to do that.
Okay.
Got it?
Perfect. Yeah.
Okay.
Awesome.
So then if you've been using a pen like I have, you can't really come up here and click on this close button because it'll just put a mark on it. Okay. So you use the escape key on your keyboard, and that should
Okay.
get you out of it. Then it will ask you if you want to keep the ink annotations that we just made,
Oh
and
yeah.
I'm just going to discard it so it's clean for next time, and that way it
Okay.
will it will keep all of those. Here's the payment calculator that I had pulled up. It was behind it. So.
Oh yeah. Okay.
All right.
Awesome,
So
Ron.
then we're
Thank
back to
you.
the Cash Flow Illustrator, the Excel sheet again, and you can put in a new scenario or save this one or whatever you need to do from here. The
Awesome. I didn't
printouts
even know
look
about
pretty
those
much the
options.
same. I'll show you one of the printouts here. Here it is. So it's pretty much the same, only the numbers, instead of stacking on top of each other in these boxes, go right down by the arrows. So,
Oh, exactly.
and
Okay.
then you can just do a file and do a printout from here, or you can also save it as a PDF file. When you send it to people, the best way to send it is as a PDF file. So if you could go in here and you just select the PDF file to save.
Mhm.
So save as and then PDF, and because most people can open the PDF files,
Yes.
not everyone
Okay.
has the PowerPoint. So.
That's true.